Good morning. This is Larry Edelson for my Uncommon Wisdom video update for Thursday, October 22nd. Just a brief update here. There's not really that much action in the markets thus far this week. Most of the action was last week. Thus far this week, we're seeing rather tight, choppy trading ranges in almost all markets. The key right now is, again, the dollar. All eyes are focused on the dollar. And I'm going to go right to that chart of the dollar index that I've been tracking for you. Here is that down-sloping triangular formation that I've been following over the last month or so with you. And in particular, this formation right here. You'll see that the dollar index fell below this support line, which I've showed you over the last couple of videos. It has so far been unable to get back above it. It has also been unable to decisively thrust below this bottom line on the triangular formation here, which would indicate a free fall in the dollar. So you're seeing tight trading ranges in all markets because they're really looking at the dollar right now to determine whether the dollar is going to stage a rally back up into this level or go into free fall mode. So we're betwixt and between right now in the dollar here, and that's why you're seeing now a tight consolidation trading range in gold, which I'll pull up the chart for you there. You can see conversely to the dollar that gold is basically consolidating in this $1,045 to $1,060, $1,070 range. If the dollar rallies, excuse me, we'll probably see a pullback in gold as far as 1,020, 1,015. On the other hand, if the dollar collapses through that bottom trend line of the channel I just showed you on the dollar chart, then you can pretty much count on another surge higher in gold. Which way will they go? In the short term, we could see a pullback and then the rally, or we could just see a blast off occur rather quickly after a few more days of consolidation. Hard to say. One thing is for sure certain: the dollar remains in an intermediate and long-term bear market, and gold remains in an intermediate and long-term bull market. We're seeing pretty much the same action in the Dow as in gold. You can see there's some kind of consolidation up here just above 10,000. In the Dow, it doesn't look that much different from gold, and there's a reason for that. Again, the stock market is looking at the dollar for its next moves. The stock market has been rallying this entire period largely on the depreciation of the dollar as an inflation play, and not so much a major economic turnaround. That's something to keep in mind for the future. I've written about it in my Uncommon Wisdom columns. And I do want you to keep that in mind. This entire rally here has occurred simultaneously with a decline in the value of the dollar and largely with gold. So for those who have thought that gold and stocks move in opposite fashion, well, here's proof positive that that's not always the case. Gold and stocks can and often do rally at the same time. And when they do, it's largely because they anticipate and they are following a currency devaluation such as we're seeing in the dollar. Till next week, have a good weekend. This is Larry.